Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 11th of January. Starting off with Advanced Energy, where it looks as though we're in a nice rising trend channel in place since April last year. Floor of the channel running through recent support, so that was around we'll call it 3.5 pence to have a bit of wiggle room, and the top of the channel they're heading towards 6 pence, which could be hit as soon as the end of next month. The plus points here, apart from the rising 50 and 200-day lines, is the way that we had that unfilled gap to the upside. Shares came back to test that, but actually bounced off or bounced higher than the top of the gap, which is a decent momentum and continuity signal. I suppose if you're cautious, you'd wait for a clearance of the 4.5 pence area, but looks as though with that bounce off the price channel floor, we are on our way to a possible 6 pence target. On to Alba Mineral Resources, which looks like it might finally be turning. A bit of a mystery why it's been so weak over recent months, but that's the market for you. Here you can see that we're just breaking out of this falling wedge, which has been placed since April last year, and also trying to break above, or actually breaking above, the 50-day moving average, 0.14. The view at this stage is that especially if we can hold that gap and hold above the resistance line there at 0.14, then the shares could head up towards the 0.18, 0.19 area, which was basically recent resistance and support on the way down. The other plus point to note is the way that we've got an uptrend line in the RSI window, so that's bullish divergence, and that could also provide a bit of momentum for the shares. The best case scenario, I suppose, over the next couple of months would be a meeting with the 200-day moving average at 0.23, but we don't want to get ahead of ourselves at this stage. Company which also looks as though its shares may be coming out of the darkness and into the light after a long time is Block Energy. Had those gaps to the downside over the autumn, which wasn't very nice. But today we've got basically support coming in at the 50-day moving average at 1.12 pence, and the longer we can stay above that feature, especially backed by that bullish divergence in the RSI window, the uptrend line there, then the greater the chance of a move, at least back towards the 1.6, 1.7 pence area, which is post-October resistance for the shares. Moving along to a rather easier situation, at least if you were riding the rally of late, that is Blue Star Capital. In this bull flag near the highs, which is nice, and while we're at least while we're above the previous high there of 0.45, looking towards the top of the rising trend channel from October as high as 0.75, which obviously would delight shareholders there. 50 and 200-day lines rising well, but support coming in well above the 50-day line, and we've got that, I suppose, only really below 0.4 now, and the floor of that channel really delaying the upside scenario. 0.75 maybe over the next couple of months is a decent estimation on time frame. Moving on to Cyber, which also seems to be ready to emerge from a falling wedge. In this case, it's one which has been in place since back in May. We've had that bear trap as well from below the initial December floor at 1.43, so that's a plus. Pushed well higher today, and also come off very oversold levels. The RSI was down at 3, which is quite amazing at any time, so very, very oversold. So it looks as though hopefully the last of the sellers is out of there, and we could see some progress to the upside. Best case scenario target at this stage up to 2.5 or 2.7 pence, which is the top of that broadening triangle that I've just drawn from July. Maybe that could be seen by the end of next month if we are lucky. The stock which is actually, I think, new to the Bulletin Board Heroes is Diaceutics, with not a very catchy name, I have to say, but this is also broken falling wedge in place since the spring, and done it quite well today with a gap as well, which is always encouraging. While we're above the old resistance from November at £1.10 on an end-of-day close basis, you can see the shares head up to the main resistance, post-June resistance, at £1.30 over the next 4 to 6 weeks, something like that. Eco Atlantic has been a bit of a difficult situation in the recent past. We had that bull trap through 34 pence, which was there in October, and then the rug was well and truly pulled. Double bottom bear trap rebound for the end of December, and good bullish divergence there as well, bullish divergence line in the RSI window, which has powered the recent recovery. The view at this stage is that while we're above the floor of the last gap at 23 pence, 23.5 pence, I suppose, we could see the shares head back up to retest October resistance, which would be very pleasant. And probably, while there's no sustained price action back below 20 pence and the 50-day line, the bulls are back in business on Eco Atlantic at the moment. Moving along to stock, another stock which I haven't looked at for a while, if at all, Fire Angel. Here we've got another stock which is looks like it's ready to regroup after the extended decline that we've had. It's always nice to see that sort of flat lining at the lows and then a jump, and that's what we've got here. The view at the moment is above 14 pence and that broken April resistance line. We're looking for the shares to at least partially or even fully test post-April resistance in the mid to upper 20s, maybe by the end of next month. Katoro is the next contender, and here we've got a situation where, again, we've got that flat line at the lows, which suggests that everybody who wanted to get out has got out. Also had a very low RSI there towards 12, so that's a positive situation. If we are indeed in a broadening triangle from July, then the target here, the best case scenario target over the next 2 to 3 months, is up to 1.4 pence. At least initially, one would be looking for 0.75 in the 50-day line and former August support. And if we can hold above that, then the 1.4 pence target could be more than just a dream, but could become a reality. Still trying to work out on a fundamental basis how Shoe Zone has managed to do so well, given that most of the time people are staying at home in their slippers, but maybe they were buying a lot of slippers. The level to break here is £1.40, and if we can do that, which is that line of resistance from last year or the end of the year before, we should head up to £1.60. But I think that given how much there's been, what the struggle that we've had towards £1.40, I think this time, or the next time this breaks, we could be in for a better rally than maybe £1.60. Could be up towards the right top of the rising trend channel I'm just about to draw now. So that's pointing up towards the 180, 190 area at the top of that September resistance line projection, which I'm still trying to draw at the moment. Floor of the channel is around £1.10, £1.20, but ideally the shares don't actually go back below £1.20, £1.25 at the floor of this September price channel. But a decent upside on offer, it would appear, if we can break through and hold above £1.40 on a weekly close basis, so maybe up to £2 by over the next couple of months or so. A couple of stocks to go now. First one is one which is another rarity. We've got quite a few rarities today. Scolium, and although this is not really a trading stock, it hasn't moved properly for many years, it might be just worth noting that if we can hold above the old 2018 resistance around 48, 49 pence, then the target here could be up to that 7-year resistance line projection, 75 pence. So that might be something to look out for there at Scolium. Clearly something has changed there, either fundamentally or technically. Finishing off with Visarion, which is a requested stock, and obviously it's been quite a journey for the shares. Keep on failing just around the 200-day moving average, and obviously one could wait for a weekly close above that, or at least an end-of-day close above that. We've got a much higher support here for January versus December, which was near to the low 20s. A higher low here for January at 25 pence, and above that looking for ideally the long-awaited return to the mid-40s, which is post-April resistance for the shares. That's it from me today. More updates tomorrow.